Title: Tax payments on investment income. Title: How investors should adjust their W-4 and avoid IRS penalties. If you invest heavily, stocks, ETFs, RSUs, options, your W-4 probably isn't set up correctly. Your employer only withholds tax on your salary. They do not withhold for capital gains, dividends, RSU vesting, large stock sales, and that's how investors end up with surprise tax bills, and sometimes penalties. Today I'll show you how investors should adjust their W-4, when to make estimated payments, and how to avoid underpayment penalties. Let's get into it. Receipt: what the W-4 actually controls. Form W-4 controls federal withholding from your paycheck. It does not automatically account for investment income in your brokerage account. So if you're actively realizing gains, your withholding may be too low. Upward trend. Step 1. Estimate your investment income before adjusting anything. Estimate dividends, realized capital gains, RSU vesting, large stock sales. Example: salary, $200,000 capital gains, $70,000 dividends, $10,000. That extra $80,000 is taxable. Your employer doesn't know about it. Wrench. Step 2. Cover the extra tax. You have two main options. Option 1. Increase withholding on your W-4. Option 2. Pay quarterly estimated taxes. Briefcase. Option 1. Increase withholding on your W-4. Go to Step 4, C. Extra withholding. If your investment gains create $20,000 of additional tax this year, and you have 20 paychecks left, $20,000 divided by 20 equals $1,000. Enter $1,000 in Step 4, C. Your employer withholds that extra amount automatically. This is the simplest method for many investors. Credit card. Option 2. Quarterly estimated payments. Instead of adjusting payroll, you can pay directly to the Internal Revenue Service. Estimated payments are generally due April 15th, June 15th, September 15th, January 15th, following year. This works well if your gains fluctuate or occur unevenly. Revolving light penalty page. This is critical. Now let's talk about penalties, because this is where investors get surprised. The US tax system is pay as you go. That means taxes must be paid checkmark throughout the year. As income is earned checkmark, not just by April 15th when you file. If you wait until April 15th to pay everything at once, you may owe an underpayment penalty. Calendar. 2 types of timing issues. Keycap 1. Annual underpayment. If by April 15th you haven't paid enough total tax during the year, you may owe penalties, even if you pay in full on April 15th. The IRS expects tax payments during the year, not one lump sum at filing. Keycap 2. Quarterly underpayment. The IRS looks at each quarter separately. If you earn large gains in March, for example, but don't increase withholding or make a payment by April 15th, you could owe a quarterly underpayment penalty for that period, even if you catch up later. Shield Safe Harbor Rule. Your protection. Here's how to reduce penalty risk. You generally avoid penalties if you pay at least 100% of last year's total tax, or 110% if your income exceeds $150,000. This is called safe harbor protection. Example: last year's total tax equals $60,000. If this year you pay $66,000, 110%, during the year, you typically avoid penalties, even if you owe more at filing. This is extremely useful for investors with unpredictable gains. Bullseye practical strategy for investors. If you plan a big stock sale, estimate the gain immediately. Estimate the tax. Either increase W-4 withholding right away or make an estimated payment before the next quarterly deadline. Do not wait until April. Brain. Why withholding is powerful. Here's something most people don't realize. Extra W-4 withholding is treated as if it was paid evenly throughout the year, even if you increase it late in the year. That makes W-4 adjustments very powerful for catching up and reducing penalty risk. Quarterly payments don't work that way. Clapperboard outro. If you invest actively, Your tax planning cannot run on autopilot. Taxes must be paid by April 15th for the full year, and during each quarter to avoid underpayment penalties. Plan when you sell. Adjust when you gain. Don't wait for filing season. If you'd like, next time I can break down real penalty calculation examples so you see how the math actually works. See you in the next video.